Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week. And this is episode where we look at what happened in the market and what happened actually in the market in the last week and how we can plan for a better trade and learn something from it as well, right? So let's deep dive into the charts. Here we have the Nifty 50 and the Banknifty charts that you see here. And then that's the weekly charts. Left side is Nifty. So clearly it's consolidation that's happening since last 3 weeks, right? It's doing nothing but moving up down, and finally last week we have a indecisive doji with a large wick size, right? Indecisiveness is clearly evident. The same is in the bank nifty as well. You can see the last 3 weeks it's doing nothing but moving up down, and finally it's an indecisive week and it's consolidating. It's an inside bar inside the big red candle that happened 3 weeks back, and then that's what we are. We are on a medium basis consolidating and indecisive. Look at the daily charts. We have corrected substantially, in the sense that it's nearly 6% of correction has happened. It did breach the previous swing low of 1774, and then slightly went to 10 points down and then bounced from here immediately. So we can consider this as still a support zone. It's still a retest that has happened and not a breach, but technically it's a lower low that is breached and new lower low at 78762 level is created. And daily finally we had a green closing on a Friday that happened in Nifty in the bank. It's almost like a hammer, but yeah, bullish and closing above the previous candle's high. But yeah, it was another retest day, it did move down. Look at the VIX size on the daily of Friday. So another retest happened. So the same zone of the 17800 nearby zones are retested for how many days? So last 2 weeks it has been retested for 5 times now, right? So that seems so that could be a very good support zone below which the market is not ready to go down. Same with the 41,800 zone seems to be very good zones. So that has been retested multiple times and bounce up has happened from there. So daily charts are showing that there is a possibility of a change of priority bounce. It's still possible, and the market is continuously retesting and taking support of the major crucial zone. Basically, look at this. This is where we are on the weekly, right? We are at a same spot from where the breakout happened, and then multiple all-time highs happened in both indices, and then we had slided down to 6% on both indices, and then consolidating since the last weeks, and finally very indecisive week was what last week was, and then we have no clue what market is going to do, right? We can only look at probabilities of what it may do. Now Bollinger Bands in the daily charts are showing that it's sliding down. It's expanding on the downside with a bearish bias because its price is below the moving average, the median of the Bollinger Bands, and with the Banknifty also. It's expanding downside with more predictive indications of downside for the bearishness is what Bollinger Bands is saying. So that's it. Let's just summarize in numbers whatever we learned from the charts directly. So it was on week-to-week basis. If you see, it was nothing but 100 points positive on Nifty, and nearly 200 points negative on the Bank Nifty. But you can say it's mostly close flatting, less than 0.5% of the Bank Nifty, and nearly 0.5% of all right. Up move on Nifty. That's exactly what happened, right? Yeah, consolidation was very much evident. Then 20 weekly moving average, it managed to close above that, both the indices, right? And we have a crucial resistance zone. We know that it's a trend line. We have seen that, and there is a the 3 weeks before candle is still engulfing all the subsequent week candles, and then it's a third week of consolidation. It's a change in priority bounce is possible because in previous resistance was acting as a support right now. Daily charts also, it's 100 points plus on both, 0.5% plus on Nifty, and more than 0.5%. It's 300 points plus on the Bank Nifty. So daily bounces done better job on the Bank Nifty. The long axis indicates that every time it retests, it bounces up. So there are buyers in that zone. That support zone is very crucial. So any breach of concrete breach on a weekly basis below that would be indicative of a downside to continue. Although the lower is breached, which is bearish. Bollinger Bands also we have seen that it's indicating for the bearishness on a short term. Let's move it and see the support resistance levels. Right, you can match up these levels along with the open interest analysis that we'll be seeing later, and then come to a place where the probabilities where the price could resist and probabilities where the price could support. You can understand from there, but I cannot. This is where exactly it is, right? So 17,959 would be a resistance. That's where exactly the price is right now. For that 18,070 could be, 18,000 rounding number could be resistance. That's also a Fibonacci 38 retracement, and then above that 18,142, 18,262, 18,385, which is Fibonacci 23, and also 18,400 would be which would be actually a lower high pattern that would get breached from there on. Probably at 18,260 12 it will breach the first lower high would get breached, and then bulls can be hopeful only from that zone downside. It's already breached the previous swing low, so the support downside would first be a Fibonacci 50, 17,800, 825 rounding number that zones, and 761 with the new swing low, that's the support, and then after that 17,642, and then 17,569, which is a Fibonacci 61. Below 17,569 we have trouble, or 17,570 to be more precise. So below that 17,500 zone is going to be very excellent support of Fibonacci 61, and below that any time the Fibonacci retracement above 60 upside or downside, retracement happens, and we have trouble. We have trouble for sure. That is where it begins. So that is something that has to be kept in mind. 7,429.30 also has good supports after that. Banknifty, while what you see here is it's at 42,371 level, so resistance immediately 42,566, and then 42,833, 43,000 rounding number, then 43,339. Likewise, it goes resistance on the upside. So first resistance would obviously be 42,500 zones, where the Fibonacci 23 retracement is also the downside. Yeah, the previous swing low, it has retested multiple times. It could be a support near the 42,000, 41,825, 835, that zones, and then after that you have Fibonacci 38, 41,586, and then 41,194, and then 40,700 near to 41,000, so Fibonacci 50. So that's how it goes with the Banknifty support and resistance levels. Now that we have seen the price action, the Bollinger Band, and the different support levels, and then let's move on to see the momentum indicators. What do they say? And the trend indicators, what do they say? ADX basically, right? RSI and ADX, momentum and trend. So the weekly charts is what you see on Nifty on the left side, and Banknifty is what you see on. No, it's not like that, right? So weekly and daily of Nifty is seen on the upside, and weekly and daily of the Banknifty is seen on the downside. So Nifty, of course, the momentum is sideways and rising up on the medium term. Daily also it's sideways, or it's not bearish, sideways and rising up, and Banknifty also sideways and rising up, not as bullish, right? So it's a sideways momentum and sideways trend is what it indicates, right? Trend indicators. Now, yeah, so something different in the trend indicator. We're talking about RSI momentum as sideways overall short term and medium term, but trend there is small difference. It's still bearish on the short term, but it's bullish in the medium term. So the recovery of the trend crossover has not happened in the short term. It is yet to happen. Because we cannot, it is getting closer towards the bullishness, but it's as of now slightly bearish, and the strength of that is rising also in both the indices, right? So that's something to keep note of. That's as per the ADX, DMI positive, and Nifty is also we're talking about short terms. Moving at volatility, India VIX indicator, sentiment analysis indicator has cooled off a little bit, 4% at 14.46, down below the 15 once again. So it is not ready to go below this 14 levels. So it had gone to 13.5 something, but then spiked up from there, and it's not ready to spike down further. So the moment it goes below the near to 13,400, we have a space till that. So the price can move up to that. VIX indicator can drop till that. It looks like it's heading down since last 2 weeks, and then that's positive. Right? It's not spiking above the 1620, that levels is not going there, but there is a probability that it can go down further to 13.5 and then take support and then bounce up here. But that could be a good up move till that happens, right? That's what VIX indicator is saying. It's a mean reverting nature, so you don't know when it mean reverse. If you just draw a line of supports, that's where it is. 13.4 is where we went lost. Yeah. So it's come back to the lower regime below the 15, but shows always just to spike up, as we have seen some 15% 2 weeks back spike, single week spike. So that's the nature of the VIX, and you have to be cautious on that, right? Moving on to the open interest analysis, open interest data of Nifty and the Banknifty showing long build-up that happened on the latest long. That's what we're talking about. The options open interest levels. We're looking at the January 19th weekly expiry, so 2023, and the put call ratio for that is 0.87 and 1.03 in Nifty and the Banknifty, which is more towards the bullishness that you can say, right? Look at the levels of. So the number of put trading contracts are dominating. So that means its market is bullish. There is bullishness in the open interest analysis. Look at the level 17,900 is both the highest support and the highest resistance. And after that, 17,800 has got highest put trading, and then 19,000 has got the resistance after that. So it's bullish, definitely bullish. Wide range for 17,800 and it's 19,000 at the second level of highest put and call trading, right? So its triangles are written at 7900 zone. So market expects a little bit of resistance at the 18,000. If that is taken out, then it's a freeway. And good supports are seen at 7800. What indicate. Banknifty 42,000 and 42,500 is where the highest put and call trading. Even that also showing that highest put trading is dominating, so it's bullish. So that's what PCR in the futures OI and options OI is all indicating a very good. More biased towards bullishness on both the indices, right? Let's see how the industrial sectors performed last week, right? It was mixed bag. You can see that the IT, the metal, and the auto moved up really well. IT moved up 3 point. IT was the biggest gainer, 3.5% up. Metal 2.6% up. Auto 1.6% up. But the rest of the sectors, like the only sector that moved down was FMCG, 1% down, purish momentum, right? But other two sectors, pharma and realty, are flat close with some gains, right? Small body gains and flat. Flat means indecisive. Small body is indecisive. Flat is indecisive. That's what happened last week, right? So IT sector is bullish, right? But the momentum is still not gone to bullish. It's all sideways. All across. Metal only has the bullish momentum as of now, right? Slight bullish is seen only in the metal. Short-term auto sector also has bullishness, but medium and short-term combined, if you see, the metal seems to be having bullishness, but otherwise it's even the metal does not have sideways only. Short-term it has got sideways only in the weekly it has got. So none of the sectors, industrial sectors, have got bullish momentum in both indices. So we'll have to wait before taking any long positions at this stage. You'll have to wait some more till the short-term also catches up across. But the major sectors that moved up is IT, metal, and auto last week. And this metal only sector that moved down was FMCG, and this flattish consolidation what's happening in pharma and real. Let's analyze this charts further in the next slide. So, look this. It is given a good bounce up, but still not bullish in the medium term yet. And metal is breaking out in all-time high levels. It's ascending well, as well as an all-time high previous strong resistance there. Any breakouts could be very good up more, but there is a divergence here in the momentum, which is bearish in nature. Momentum divergence I was talking about. Look at the auto. Auto also is very good bounce since last 2 weeks to 3 weeks, and momentum is still below the bullishness, sideways, but rising. Sideways rising momentum is what you see. Pharma has taken a support in the channel, and it has taken a bounce from a very crucial zone of a confluence of the barrel channel as well as trend line 2020 is momentum is sideways. FMCG is also taking near the neckline support. It's having a box rectangular pattern. It's not reached that, and then it has fallen to the sideways from the bullishness earlier. And last week was bad for the FMCG, as we had seen earlier. Reality, the charts are showing that we are back to near to a neckline. There is also a consolidation there within a rectangular box. Momentum is sideways. Price action also is showing sideways movement. Looking at how the industrial heavyweights will analyzing the 7 top constituents of the Nifty 50. So HDFC Bank remains to be bullish, and you have a bullish positive reverse divergence that is seen here, and there could be a possibility of a big bounce up that can happen if it works. That's in confluence with the flag pattern, but remember we are in a very long period zones, and a real breakout will happen only if the price moves above the 1726 consistently, not a spike like what is seen way back in April or before that 2022, but like consistent move and a close green candle above 1726 only would mean it's out of the bear zones. Until then it's tough, but bullishness is evident all over this tipsy bank. It's also the flag pattern divergence, bullish nature is there, and trend has not crossed all the bear zones yet. It's not fallen into the sideways yet as well, right? So bullishness is there in both in the HDFC twins, and Reliance is consolidating for sure. It's in the sideways since long, and you can see that box and the parallel channel where it is playing up and down since long, right? But it has happened, and this is upper than a decline of the cup and handle from where all this started. Sideways moment, I mean. It was 30 stocks had done well. You can see very good bullish candle recovery, and TCS is on the edge of the breakout of the trend line, and momentum is still sideways but rising up on the medium term. And fee also it's got a lot of resistance in the upside, but definitely it's trying to move up. Is what last week said. I said we'll have to wait and see if that breakout happens to TCS, and Nasdaq also reflects that in the coming weeks accordingly. It's definitely heading up, and rising momentum is what you see overall on the IT stocks in fee and the TCS. HDFC Bank was weak and it corrected a lot, but it not completely breached the neckline, still at the zone for a bounce up would happen, but sideways and falling is what you see in the momentum on the medium term. Consolidation and very close to support zone is what Kodak Bank is at in the momentum perspective, and it has been moving in this very long consolidation zone since it's more than 2 years now. How did the Fyers in the DAS participated? That's very crucial. It's a very sad part that the Fyers had been selling last week also 9,600, previous week also it's even bad. That's huge selling that is happening there. Foreign institutions and money has been flowing back from our country while it's flowing into the China is what the news is talking about, right? So big money is falling down. 15 days continuously FIS has been selling, not even a single day of buying in between. While the only guys who's making the market stay there is the domestic institution, which once again bought 10,040 crores. This is a mistake here. Let me correct it right away. So that's a 10,000 crores of buying that made the market stay flat. So domestic institutions are helping, but how long would they? If a lot of the money is happening large scale for continuously. So all eyes on when will the stop? When will the FI stop selling at least? Even if not buying, but market needs to move. Definitely they have to come back as buyers. Even the derivatives longs that are also net longs FIs and DSO moved down last week. Right? That's the summary of the institutional participation in the markets. Moving ahead, let's analyze and see how the global markets and the global commodities. A lot of good, interesting news out there. A lot of things are changing there. I think the Dow Index, after a very long time, has now moved 11% or more. Just breached the neckline from the red block out, and then made the 2-decade high and all that. So it's over now. The correction has happened 11% more than that. Last week it was big drop of nearly 2%, 1.7%. Now it is 102.1. Looks like it might be heading towards the Fibonacci level of 99 zones, and the breach of this neckline would mean some bearishness could be in the dollar index. So that's a good thing. The dollar has cooled up, but has it reflected that much on the USD last week? Yes, but overall it is still at a very high level of 81.25. But momentum has slipped from the bullishness, and this is also a mistake there. Momentum has slipped into the sideways zone actually on the medium term, and that's good that the USD INR, we're talking about the USD INR, not, oh, there is something wrong there. Yeah, so what you see here, yeah, down here is USD INR. You can see that it's a breach of a trend lines in a parallel channel. It has been rising up, and now So we've reached that, and it has made a double top and then try and move down, or it has slipped the sideways. Bearish, no CDX indicator is there. Overall, it is good that the price has fallen below 82 and now it is 81.25. And the moment it is below 80, it's going to be good times if it stays there. So rupee is slightly strengthening, but still not too far away, because from the all-time highs, weakest, so please yet to completely appreciate. So all eyes on that. But that's a good thing that happened, that the currency has turning in favor of the markets. Now, US markets, global indices we're talking about, right? US markets, Dow Jones, analyze, and S&P 500, and then Nasdaq. Right? Look at the charts of this. It's all the same distinct wedge. Now, Dow Jones is it's like the Nifty 50 that we have. It's a 50 stocks. I think 30 stocks down. And Nasdaq is 80 stocks only. Information technology stocks, and importance is for that. And then S&P is a broader index, a larger number, S&P 100 or something stocks on that nice, so broader index of the years. All of them showing that it's trying to break out. Till 3-4 weeks back, we were thinking that it is all falling down and reversing and going down, down, down. But suddenly it has taken a U-turn and then moving up and trying to bridge, and it has turned to be bullish. Although the momentum is still not yet to climb to the bullish ones, it's green in the Nasdaq, in the S&P 500, green all over. So, but it's still at resistance major zone. There's no confirmation it's completely going to green close fully above the trend line could indicate that it's further up more. Right? So that's very positive thing that has happened along with the currency move. So inflation improved, jobs letters come in, inflation letters come in. So that may be the reasons of this green that we're seeing, which is good. It's not just the US markets, the European markets, and we're also trying to break out. If you see the German, French, London, all these markets, if you see the major stock indices are trying to break out and reverse upside, similar to how we are seeing in the US markets. The Asian markets are also green, except for the Japanese market. So that's good news, along with the currency also easing off a little bit. Now, what will do we analyze? Crude. This is also very important, right? Crude has been falling down towards the bottom and consolidating there in the bottom part of the parallel channel, but it spiked up and moved about 80 last week. And this divergence is there in the momentum, which is bullish in nature, indicates that there is every chance that it can move further up till the channel top, which means towards the 190 that levels, which is a worry. Hope it does not happen and finds resistance 84 at least. As long as it stays below that, it should be fine. Otherwise, it could take you, very easily towards the 100 level. Right. So it's spiking up and has a momentum divergence also in favor. Yes, but still at the 80 level it should be okay. Right? Given the advantage that we got from the currency and the US indices turning positive. Look at this gold. Gold is spiking up like anything crazy. Right? Crazy spike up. And what percentage is that? Gold is 3% of spike, nearly 3% of spike. And look at this move, gap up, solid weekly candles, and then it's right at the zone of resistance. And if that plays out easily, it could make an all-time high of 2074 plus. Momentum, look at this momentum, spiking like a rocketing in the bullishness. The weekly and daily charts and trend indicators are taking U-turn, and the ATX is rising up, indicating strength in the trend. So all-time high is what all lies on. But remember, it's a cup and handle fan. If that handle also breaks, it can be big moves. But all it trouble is gold is now a hedging instrument, and then could this mean that the markets are anticipated to fall down, that people are investing more in the gold? Is that what is happening? We'll wait and see, but that's the only thing. But yeah, so this may be the time to sell off your previous gold assets and then make money. That's one way. And if the breakout is confirmed, probably you can do SIPs and then buy in also. But more often, gold is used as a hedging to balance your portfolio. So that's how it is. So that's the interesting news that has happened last week. The gold is spiking up. US indices seems to be turning suddenly positive and then spiking up with the inflation coming down. Right, and the jobs data and all of the other outputs that came in. So that's the currency, crude, gold, and the global markets. That's what we analyzed. Overall positive is what we can make out from it. No bad, but Still, there is uncertainty regarding the COVID, regarding the war, the Fed interest hikes further. All of this uncertainty is still there. That's why the VIX is not ready to move below the 13 level. So, two topics for the next week. On Tata Communication, weekly chart is what you're seeing. It's descending wedge pattern price action on the weekly, and it's broken out. I don't know to fall down from that, again bounce up from that, and it also has got a inverted head and shoulder pattern, which is also confirmed to be broken out, and it could be very rewarding if you manage to get a entry at this point, and then the price moves up. The momentum is clearly bullish on the weekly. Volumes are also above the average, moving average volume, simple moving average. It's above that, so it should be fine. And trend indicator index also is indicating that strength is there in the trend. HDFC Life Insurance is the second bullish. It's having a range shift and taking support of the RSI 60. Good volumes above moving average, and it's also having a descending wedge and a breakout that's happening. And a price entry above this previous week's high could be a good swing trade opportunity that could be rewarding till the next resistance, and you can also always trail upside if the price moves above with tight stop losses from then on, right? So volumes are good. Momentum is showing momentum range shift and bullishness. Trend also having bullishness with strength on the medium term charts, the weekly charts. HDFC Life Insurance is long, Tata Communication long, two long calls for the next week now. This is the payoff charts, no options payoff charts of Nifty, a Batman strategy, what they call, where we are doing nothing but we sell at this point OTMs for OTMs, again buy OTMs not as far as where we sold, and then we hedge it or for OTMs to protect big black swans, right? So we would have an average kind of profit in the zone middle, and if there is a breach happens, we're still protected. We will not wipe out the capital, and if it is on the selling point near to this, then we get the maximum profit. That's the strategy, and so it gives very good range in the property profit, right? Property profit is 84 nearby. Look at the range, 17,500 level to 18,400 level. So market is very less likely that, very less probability. You cannot say it will never happen, but very less probability that it can break out in a week. That's in a week, 5 days. It's not going to happen. So you will get less profit. Look at the risk reward. It's not that great, but you get it consistently. You don't take risk. You don't take too much risk. If you want to take risk, then increase your capital size more instead of. So the proportion of the selling is now. Look at this. It's 1:3 132. 132 is what's happening, right? 132 is a proportion. So 6 lots you're selling, then 4 lots you're buying as a hedge, 2 lots you're buying as the inside buying, right? Buying here is 2, buying here is 4, selling here is 6. That's 1:3 is kind of proportion. You can increase that proportionally the capital size, but you will consistently get a profit. You'll not make it big, but you'll consistently get. So that's a safe, completely defined, risk defined, hedged, right? Options non-directional strategy. So you don't know where the market will move. If it is moving sideways, if it is trending up, at least you can hope if this candle high is breeze, then you go like that, right? But if it is flat, moving up, down, you don't know. So it's basically sideways overall on a weekly basis. If that's what's happening, so it's very difficult to predict. So that is when non-directional strategies comes into play and help you. Let's wrap up now that we have had a detailed analysis on various parameters. Let's conclude on something, right? So what happened last week? Nothing but it was consolidating on a weekly basis. What happened last week again? It closed indecisive. It's consolidating, and it's at the same time not sure what to do. It's not giving any clues. So it's still at a support zone. These are the three things. It's still at a support zone. It's not breached and fallen into that place from where it had made all-time highs. So that's where we are. That's a summary. Now, what are the chart and the different indicators? So, trend momentum is sideways. but it is rising up. Bullish nature is there, but sideways still. But we cannot say, we cannot go long yet. What is the match? We're talking about only a week, not more than that. We're not talking about 2 weeks. We're talking about 1 week. So Bollinger Bands are having expansion and downside, but in between it came into the contraction with a sideways movement. Then again expansion. That's what happening. So it started the expansion, you can say, and that's having a bearish bias, not a bullish one. Uptrend is bullish. That's fine. And US indices are reversing up. Right? But the big problem is that Fyers is selling. 16 days continuous selling. 10,000 crores nearby selling. 2 weeks consecutively. So this is not great. Your price pattern is also indecisive as this. Could be that it is retested multiple times and big. That support becomes weak and then it can breach on that possibility. So I remain mild bearish unless I get mild bearish plus neutral, I can say. But I cannot be bullish for sure unless I get a chart shouting out to me saying it's bullish. Right? It is good support zone. So what we need to keep in mind is it's a very good support zone. Having said that, my view is mild bearish. It's at a very good support zone. Change in priority bounce is there. You can interpret it as a bullish or a contract trade or bullish or whatever. You can take that position, but I take this view. That's my my decision. It's up to you based on this parameter. There's also a possibility that you can take it as a support zone and take a contra bet and then take a little more risk and then go long. It's possible because it's a very good support zone. Say a bounce is possible. Over interest is in favor. Volatility divergence is there. Momentum divergences are there. Volatility divergence is forming a doubly pattern on the daily charts. Momentum divergence is also on the bullish nature on the daily charts. So we don't discuss that, but in the daily analysis we are discussing that. That's also in favor of the bulls. These markets are reversing. Crude is not that abnormal. Rupee is slight gain has happened last week. So a lot of positivities from the global markets, currencies. All these positivities are still there. So that is all in favor of the bulls. It could not make any big crashes, and at least even if it is not breaking out, it could consolidate more and then remain this range without breaching the support. It's a possibility. So these markets breaking out is something that's good. Because big moves are happening, means big breakouts can happen our side also, or the vice versa as well. Right? So global cues are still fears that causes the global recession fear, that global uncertainties like the recession fears, inflation, interest rate hike, COVID war, all these things are still there. Right? So if that plays out one fine night as a black swan, then God help you. And if you're not hedged, nobody can help. So crude oil is rising up. That's concerned. Rupee is beginning, which is good. Weak, not good. Right? Rupee is still very weak, but showed some improvement last week. And just further continuing, then it's good. So a lot of so that's what. So uncertainties are not fully gone because we've seen a big spike of 15% just 2 weeks back. So that's how VIX behaves. So uncertainty is not over until we are further down to this below 13 levels of VIX. It climbed to 15.5 kind of things, but yeah, so VIX is telling the story what the sentiment is all about, right? So be cautious about that when until it's at this position where some amount of spikes happen, but last 2 weeks VIX seems to be behaving okay, not indicating to not having any indications of a big crash like spiking above 20. That's not good. That's not very much indicative of VIX as of now in the short term. So levels to see is 17,500, 40,500, 18,500, 43,500, and up and on the low and up on the indices, both Nifty and the Banknifty respectively. Right. So as I always say, protect your capital when the price is crashing. Right. By using option strategies or gold or so that's how we do it, right? Or other instruments of diversifications, etc. But protecting capital on long-term quality stocks, very 100% sure quality stocks alone. Only protect only that. Others cut off and make small loss and be happy that you will make big losses, right? So invest only in long-term capital. And then use option strategy to do the covered call or cash or get puts and all that to invest further and get rental and get at the same time, right? And options trading short term, if you're doing, do it with hedge positions, non directional. If you're not sure what market is going to, predicting market is the toughest thing in the world. You just cannot predict. We can only talk about probabilities. That's all we have been talking about, analyzing the momentum trend, optimism data, global markets, crude oil, all commodities, everything. Just to look at probabilities where what could happen, but we can never be 100% right as a markets supreme. They take you for a ride, means they can do anything, right? No matter what you do. So all that is in our hands is to protect our capital and manage the risk properly, reduce and increase the percentages accordingly, and you know how to manage the risk. Half the job is done, right? So that's what is more important. So thanks. So that's my view, my bearishness, and thanks for watching. So if you like, if this video and analysis, detailed analysis has helped you to get some clarity on your next week trade plan for the next day, then please subscribe if you're not done, and share it to the maximum friends. We have very few solutions. I appreciate your help in this one. Okay? Thanks for watching. Happy trading, happy investing, and happy learning. Bye bye.